Good morning, traders. Chris Bus here with your morning look at markets for Thursday, August 26th. It's 6:15 as I'm starting the video. And as always, I recommend that you watch the video at 1.25x on your player. It'll go through real smooth and you won't miss a thing. So a lot of red on the board this morning on futures, but none of it really amounts to a whole lot. A tenth here, 2/10 there. One item caught my eye, and that's oil down 1%. So that has taken a huge bounce off the floor of last week and has shot up quite a bit. That was one to note. Over on macro, we've got a GDP print this morning, jobless claims, natural gas inventories. We've got a 7-year bond auction. From what I understand, the 5-year auction didn't go that hot yesterday. So we'll see how the 7-year maturity does. And the FOMC's Jackson Hole Virtual Summit kicks off today at some point. I have no idea what the slate of speakers are or the topics or anything like that. But the key one, of course, is Jay Powell tomorrow at 10 o'clock Eastern Time with his presentation. And because Powell is tomorrow in the morning, I think we may see the market go kind of, into that suspended animation mode where you've got, event risk the next day, kind of like the day before an FOMC meeting or, some other known event. It may slow down here today, but, we've been surprised before, so be ready for anything. So earnings this morning. I'm embarrassed to say that I missed the earnings for Dollar Tree. I've got a position on. That one got away from me. I am embarrassed to say. So right now I'm just hoping and praying. I mean, the stock has been doing well, but the whole reason we get these things is to capture a run up into earnings. And we got that, but now it could all be wiped away. So anyhow, I apologize about that. If you were in the name and you exited, you had a nice profit. So I'm happy about that. But like I said, for those of you that weren't aware, I apologize for that. It's always a good idea to, on your own in your own process, even though you may get an idea from me, just to kind of double check when earnings are and make a note of it in your process, and hopefully you won't get tripped up like I was. So we got Dollar General as well. We've got Cody, that XPeng, XPENG, and we got Burlington Apparel. So we've got that in the morning, and then after the bell, we got Peloton, Workday, HP, Dell, and Ollie were the discount retailer Ollie reports tonight as well. So I think for the sake of time this morning, because things have really not changed since yesterday, I'm going to skip over the oscillators and the dollar index and bond yields and jump right into equal weight SPY. We were in the trading range. We broke out. We back tested, came off the 50, and now we're at all-time highs on the equal weighted SPY. Always keep in mind, if you're new here, we've pointed out in the past these bearish divergences on RSI and momentum. Not a sell signal, but a stiff yellow flag blowing in the breeze. You'd like to see momentum and RSI break out to kind of validate this new high in price. 2 hour, just more or less a slow grind yesterday. I've dropped in a new support level here at about 448.50, call it. I think anything north of that, I mean, bulls are absolutely fine. If you lose that level, I think you're going to come in here to the midpoint of the channel, down, 44.75, or excuse me, 447, right in that area. And then, of course, you got the levels down below and an open gap. Moving on to the 30-minute chart, we had the strong open, got price above the prior high here at 448.50, and had a strong morning session, but in the afternoon kind of faded away. Here are the detailed levels of your support: 448, 447.50, and here's 447. You get down into losing 446, then you've got to open up the thinking of filling this gap. And so you've got the levels up above here if you want to engage in a tactical short, or just be aware of where we're at and wait for support to establish itself where you can re-enter long. Qs, I mean, they weren't feeling it yesterday. Yields were up, and we've talked about yields being higher, being somewhat of a headwind for tech. Not saying that was a reason. I'm just pointing out what could possibly be going, what was possibly different yesterday than in the days prior. And if you think about it, I mean, after this type of a run, it may consolidate here for a while, and that would be, healthy. Probably be frustrating if you're trying to make something happen on a short-term basis in your active trading. But I think that's a point that if you recognize, hey, this thing's not going anywhere, staying between 374 and 375, I don't care who you are, it's going to be hard to make money trying to trade that kind of an interval. So you just have to recognize that and say, now is not the time to keep, throwing darts at something, waiting for it to break out or break down. It just may need some time to consolidate this big move. One thing I would like you to do is set yourself an alarm here at 373. Why? Because notice the volume over price void, almost no trading between 369 and 373. So if price were to come down and lose this 373 level, I think it's going to move quite quickly. And I think that's a tactical, active short that's a high probability trade. And so if you're, searching for setups, that's a setup I would give you right off the bat here, because just this, whenever I see these structures of voids in the chart, those are always setups that I'm interested in, because price tends to move fast in those areas. So it also would obviously be a place to get out of your, if you had any index longs, that's got to be your stop there, just below 373. And like I said, if it breaks below, then I would be looking to the short side. Here we just have the same setup, blown up a little bit. Obviously, if we take out yesterday's highs, you want to be long in here between 374.50 and 373. Might be a little choppy. But other than that, I would have that 373 level alarmed for a tactical short. IWM 2 hour. We had been tracking this one pretty well. We had price come down, test this prior low down at the bottom of a big trading range. This level here, 224, is the exact midpoint of that big trading range that goes from, 211 to 234. So we got the big bounce, and I sent out a note in the morning, I think it was, that if you got a tag into 224 to take full profits, I didn't expect that price was just going to waltz through. So we did start to get a reaction here, and actually price is a little bit lower here in the pre-market. So I think the first area of support is going to be the 50 EMA on the daily, which is this gold line here. And that's down at, I've actually got it obscured, like 221. Yeah, 221.30 would be a place to look for support. And if that fails, probably coming back here to 200 or 220, sorry. Let's look at it on a 30-minute chart, because I want to kind of share with you something I was upset with myself about yesterday. You know, if you've been following long and trading this was easy trading, right? Buy support, and each successive move higher were entry points. We had a recapture here of 218, a recapture of 219.50, recapture of 221.50, and actually we said yesterday that we wanted to be long because the door was going to be open for a run back up to the top of this box, which was 224. And actually the first candle, you can see that they pulled the rug out from the open, brought it down here to like 221, maybe a little below, and then recaptured it. That was your buy if you weren't in. So that was a good opportunity, because went right up to 224 and had the reaction. Now, let's just go through a trading thought process, and I'll tell you where mine broke down yesterday. On the upside was all well and good. Good calls. Good calls to stay long. Good calls, buy points, all worked out great. Closing whatever longs you had out there, close them out at 224, because the idea is it's failed here numerous times in recent history, right? So that's going to be stiff resistance. But right here, I did more congratulating of myself, how well the trade worked out, getting it rather low and working it up here, and being bullishly minded with the move in the yield curve, the move up in bond rates. I think that's going to be supportive of small caps, cyclicals, financials, all that stuff we've been talking about. But as a trader, what are you supposed to do right in that moment when you've got price coming into a level that it has proven it cannot get through? The trade is to flip short and set your stop right above make price prove it. And actually, if you did that, you would be a winner either way. And let me explain why. Even though you may have been bullishly minded like me, you put on your short, you assume that precedents will hold, meaning it's for sure not going to waltz through, right? And we were right about that. It took a couple looks at it, then backed away. But here's the deal. You buy support, you sell resistance until price proves otherwise. Resistance is resistance until it's taken out. So say you took a short here. One of two things is going to happen, right? The first thing, or option one, is price is going to go down, right? So your short is a winner. And if you shorted at 224, you're looking pretty good right now. As price moved back away, back from 224 back to 222.50, you're already $1.50 to the good, and even lower this morning. So that's option one. Option two is price breaks out, right? So you get stopped out on your short, but now you got a massive green light to go long and look for 233 on the upside. So in that scenario, when you've got, quote, the line, I mean, that's the perfect situation. You would have no doubt that if price broke out above 224 after all these rejections, you know that's a huge green light. So you quickly take your paper cut loss on your short, and then you flip long with your bazooka, and then you've got a great line to shoot against. It can do whatever it wants up here, but your stop, anything above 224, you would be profitable. So, I mean, that's just a great location to do what I just said in that scenario, and not get too caught up in yourself of, the money you just made and you closed it out at the perfect spot. And meantime, the next big opportunity is passing you by. So think about that in your trading. I was disappointed in myself yesterday not to have done that. So we'll have to see what happens this morning here. Facebook, same modus operandi as the last couple of days. Big opening candle, pulled back to support, and then did nothing the rest of the day. One technical achievement it did do is it broke above this 368 resistance and consolidated above that level. So now, as long as price holds 368, your target is 373. And if it drops below, then your target's 364. So any way you cut it, 368 is your pivot today for Facebook. Apple was soggy. I think we opened, up here. We lost 149.50 relatively early, that first candle early in the day. Then it just kind of fell apart. A couple little bounce candles into the close. That was not a great day for Apple. Not sure why, but doesn't really matter. You lost the level there. That was our pivot yesterday, and so if you were actively trading it and wanted to trade it, that was your short. And then, that trade worked out fine. Now, this morning, the pivot's 148.50. If it can reclaim that level, that's your buy point with 149.50 being your next target, and then back to the prior high. If you lose 147.50, then you're back down in the 146.50, 145.50 area. So the levels are working well. Just decide if trying to trade that is your thing. Today might not be a great day for active trading just because of the Powell thing tomorrow, but we'll just have to wait and see. Tesla came up here to 715 and did fill the gap, but as you can see, backed away. So now, today, I don't think there's a lot of trading to do in between 705 and 715. We've got this big gap above that's yet to fill, and I wouldn't really worry about anything on the short side. But if price loses 705, then next support is 700. And if you lose 700, then you're back into the 690s and potentially 670s. But I think the opportunity is for price to break out and run up here and fill that gap. If nothing else, it takes care of unfinished business. And, that's always a good thing. So there's that opportunity that's still up there. Microsoft was soggy. Tried a big opening candle, and then they faded it the rest of the day. This I did move this support line. I had it at 303 yesterday. I moved it down to 302 just because of this larger volume over price bar that has formed. And so it took a good look below, but then came up and recaptured that. I think this may take some time to fix itself, but from a technical standpoint, if price recaptures 302, which it has, you can be long against 302 and look for a move back up to the top of the box. And then if you get lucky, you get the breakout and it goes on to higher ground. But real soggy action yesterday. Same thing with Microsoft. Absolutely no changes or same thing with Amazon. No changes to the chart. I mean, it moved. I don't even think it moved $5 in either direction. Just a real flat day. So 330, 3,300 remains your pivot on Amazon. Same thing with Google, really. Just real flat action. Anything above 2840, you can be long into blue sky. Really strong chart. If you were to lose 2825, then you may see price come into 2800. And then your 2800 is going to be a relatively important level. Why? Because there's that void we were talking about. And then you'd probably see that move into 2760. And so that would be, a $40 move. That's about the only place I would even be interested in shorting Google. I mean, it's just been so strong. It's, it's a tough one to short, but just on a tactical basis, a break below 2,800 into a volume over price air gap, that's about as good as it's going to get on trying to put a short on Google. So we'll have to wait and see. Netflix, again, not a whole lot. I think your pivot's right here at 550. You've got a layer of resistance at 552.50, and then at 560, as we've discussed. And then your first level of support is 542.50. And so you really want to see this 542.50 hold if you're a bull looking for higher ground, because if you lose that one, then you're gonna come back here relatively quickly. Semiconductors is in this kind of like a bull flag setup. top of the flag at 268. So if you get a breakout above 268, you can look for 271. If it falls back down below like 266.75, it'll probably pull back into 265, possibly even fill this gap. If things get ugly out there on Powell or anything else, we still got unfinished business back here for this basically a $3.50 to $4 gap down here between 556 or 256 and 259.50-ish. A couple of charts I want to show you. Hilton. I sent out a long ID on that the other day. We were somewhere in here, like 121, maybe 122, I think was our buy point. And we got some really nice follow through the last couple of days. And so on Hilton, you should put your alarm here. Let's just call it 130. We're positioned in the October 125s, or at least I am. So if we get a breakout above 130 and take out this big trading range, and let's call that $10, a breakout above 130 would target 140, and what I would want to do there, you can trade it the way you see fit, but I would probably like roll up to even money, roll up to the October 130 strike, and then I think with this gain that we would have at that point, we can book those gains and then roll to a higher strike, roll and protect, that thing we've talked about many times. Or if you want to just stay in the trade, move your stop up to like 129 or 129.50, something like that. Because once you break out above 130, you don't want to come back. We can see this example here. Breakout, everybody gets long, then they fade it, then all these people, once it comes back inside the range, realize that they're wrong, that they're trapped, and then they sell, and the target becomes the bottom of the box. So that's a nice example of a fake breakout and a move back into a well-defined trading range where your target becomes the bottom of the box. So we don't want that to happen to us. So if we get a breakout, you could either roll your strikes up or move your stops up to like 129.50 or something like that. Here's Red Rock Resorts. I'm gonna do a sector study on gaming, but with this recent reopening cycle, I'm just talking in several days. A lot of these names have moved quite a bit. You can see here from 39 to 46 in 4 sessions. And that's just about how long it started last Friday, and then Monday, Tuesday, Wednesday. So it's gone from the bottom of the box to the top of the box in 4 days. And so now you can set your alarm at 46, and on a breakout, this trading range is $7. So then your target would be 53 on a breakout. But this is just one example. There's quite a number of them in the gaming sector. If you want to take a look on your own and kind of front run my analysis, that would be great as well. We can compare notes once I publish that. So anyways, and then lastly, let's wrap up with ITB, which is the home builder ETF. We had a breakout. That was the head fake from 2 weeks ago, where the rate and growth scare got the better of this breakout, and they pulled it back to a tag of the 50, and now it's breaking out again with price recapturing all the moving averages. So if you're interested in home builders, alarm 74, and then on that breakout, it would target 77, the prior high up here. So you can see how PPO is about to cross, and RSI never lost 50. Those would be good signs on those indicators to supporting a move higher, is what I'm trying to say. So a few setups there. So let's do a quick recap. We've got some economic data prints this morning that are going to be important, the GDP and the jobless claims. We got Jay Powell tomorrow, which may be a reason today for trading to be soggy. Just be aware of that. And also, ahead of Powell and ahead of the weekend, just make sure that you have what you want entering the weekend. For instance, I threw out there, the home builders, ITB. Say that breaks out this morning. Make sure you look at what you got, because you got Powell in the morning, and although everybody's not expecting him to say anything, he always has the potential to blow up the market, right? We hope he doesn't. We expect that he won't, but there's always that potential. And so if you already are stacked up long, do you really need one more a day ahead of Powell? Probably not. If what you have is working and you're comfortable with your exposure, then stick with what you got. If you got a couple of dogs in there that you really should have gotten rid of already, then switch it out. Close the things that aren't working and take a stock or an issue that's breaking out, and maybe you can upgrade your portfolio that way. So anyhow, all I'm saying is make sure your risk is in line before Powell and the weekend. Just make sure you don't get too far over your skis. I've kind of bungled the way I've been trying to tell you that. I'm just at a little bit of a loss of words how to say it creatively. But I think you get the point now. So have a good day of trading. I'm going to put together that gaming sector review, and I will get that to you at some point today, hopefully before lunch. But other than that, let's see how they open this thing. Do your pre-work. Make sure you know your levels. Write out a little game plan for yourself. And I think you'll have a good day of trading. This has been Chris Buss with Trader's Profit Compass. Talk to you next time.